Welcome back. You are still watching Nedbank Business Watch. Now for our market analysis segment, I am joined by Sandy Swadlamini, who is the Treasury Dealer at Nedbank. A very good afternoon to you, Ngozi. I'd like for us to start in the US. Yesterday we saw Apple releasing the new iPhone 17. You know, what does that mean for consumers? Any reactions on that one?
Thank you, Nancy. Good afternoon to you, and good afternoon to your viewers at home. So, as you have rightfully mentioned, Apple made a big launch yesterday for their iPhone 17, which saw a big reaction on the market. Unfortunately for Apple, their stock price dropped because the reception from the market was not so great. So there's still going to be time for this to settle, because investors are looking to see if this new product will gain a lot of sales in the market. So if Apple manages to drive up sales, maybe we will see their stock price bounce back. But at the moment, this was a bit of a disappointment, because investors are viewing the new product as not revolutionary, but as an improvement over the past designs. There are definitely a lot of improvements, but there is nothing breathtaking, or
there's no wow factor.
Yes, there's no wow factor in the product. But we will see in the next few days if sales are going to pick up. But it's also worth mentioning that what we also see is that Apple have not increased their prices relative to the tariffs that have been imposed by the US government. So these have been a good review for consumers, which means Apple as a company have taken the hit on the tariffs instead of the consumer, which is a positive.
But if the reception wasn't so well, I mean, they are ranked as one of the leading tech giants. You would expect sales to, you know, really rock within the very first few days of release. What went wrong?
So usually there is a bit of an excitement. That's the disappointing part. When a new product is introduced in the market, what we usually see is that a lot of people are excited about the new product, the new specs. Okay. But in this case, the specs are improved, but there is nothing new. Unfortunately, Apple is following behind on the Android competitors in terms of their AI implementation on their devices. We have seen a lot of AI being introduced by Samsung in the past probably 2 years, but Apple have been lagging behind in that aspect.
U.S. President has a push for 100% EU tariffs on India and China. Could we perhaps see this escalating global trade tensions?
Thank you for that question. From the U.S. perspective, so what is currently happening is that we have seen Russia ramp up their attack on Ukraine. In the past few days, we have seen Russia killing over 30 civilians, injuring over 20. So as a response, the presidents of United States have tried to coerce or include Europe in a retaliation for these attacks. So this will include the 100% tariff, which is quite high. So now he's gathering the European Union to also impose those tariffs, but not to Russia specifically, but also to India and China, who are the consumers of the Russian oil. So, but we have seen this spill over, especially to the oil prices, gold prices, because this is also putting a lot of uncertainty in the market. So the prices of gold have risen, the prices of oil have risen. So the rise in specifically the oil prices is from the fact that we are currently seeing these tensions between Europe and Russia. But on a different note, we are also seeing new tensions in the Middle East. We have seen Israel strike Doha just a day or two back, where they were targeting Hamas leaders, which is something that the United States condemned. But this also signals that there might be further tensions in the space.
How are commodities reacting to this intensifying war in the Middle East when you look at the numbers?
So from the numbers perspective, if we look at commodities, gold prices have risen. This is because most people in times of tension, they go to buy gold, which is considered a safe haven. Brent crude oil have also risen quite significantly compared to gold, and this is because in the Middle East, this is where we get most of the oil supply. So these wars are sort of disrupting that oil supply from that side. So currently what's happening is that you'd find that the suppliers of oil, one, have to supply, let's say, countries like Swaziland or South Africa, they have to change their routes for the transportation of oil to make sure that they reach those destinations. But in most cases, you find that this increase the prices of transportation, which will then translate to the price of oil. Right. So in that instance, we are experiencing those price spikes. And in the past few days, we also seen that the US dollar as a currency, the past few days, it depreciated significantly. This also translated to this because now the prices of gold and these commodities are denominated in the US dollar. So the weakening of the dollar also translates to these prices. And that was mostly coming from job data that was released yesterday, whereby the US have signaled, or the data signaled that the US have a rise in unemployment rate, which reached levels of 4.3%. Right. So yeah, there's a lot happening currently, unfortunately, especially in terms of the tensions, and this will eventually translate to the prices of commodities.
With the depreciation of the dollar, how are some of the world's leading currencies actually looking right now?
Yeah. So in terms of currencies, this morning we are trading at around 17.5, but it's important to highlight this because the US dollar was not doing so well yesterday. It depreciated heavily at the expense of the dollar. The euro and the GBP had gained. So, but this morning the dollar have bounced back. Yesterday it reached levels of 17.45 flat, but it had just bounced back just before end of close. At the end of the day, where it closed at 17.5. But that was a reaction from the jobs data. But today we are looking at PPI data, which is followed by CPI data tomorrow. These are inflation numbers to signal if the inflation in the United States is continuing to rise or it's dropping. But this will also impact the decision next week for interest rate cuts if the government or the Fed continues to cut their interest rates.
In 30 seconds, what's your observation of equities?
In terms of equities, equities have all risen. This might not be consistent with the trade tensions in the Middle East, but what's happening is that for the JSE All-Share, we are seeing that South Africa is relying a lot on commodities like gold and platinum, and the prices of gold have risen significantly in the past few days, and it's projected to continue to rise. So the rand have benefited a lot on that, even though there are tariffs that have been imposed to the country. In terms of the FTSE index, it have also increased, and the S&P. For those, the increase might not be welcomed by most, but because of the tensions, we have seen that stock prices for defense companies have also risen because these are companies that will make a lot of money in the case of a breakout war in the Middle East or even in Europe. As we have seen this morning, there were reports that Poland have engaged military assets from Russia that have violated their airspace. So in response to that, NATO have attacked those. And this, we are still awaiting a response from Russia, which might escalate a war, even including NATO, which is unlikely, but it's a possibility.
Right. Sandiswa, thank you very much for your time. That was Treasury Dealer at Nedbank, Sandiswa Dlamini, breaking down the markets for us this afternoon, just filling us in on some of the headlining stories that are actually affecting markets. This has been Nedbank Business Watch. Until the next edition, take care.
Make better money choices. Choose a bank that takes your money seriously.